Welcome back. This is India Market Open. We're taking stock of the futures and options space, and well, it's been a good place to be in, at least for those who are long in these markets. We continue to see benchmarks make new life highs, and along with that, well, considering we are looking at the options as well as the futures expiry, it does seem like the rollovers are also towards the long side at the moment. Let's start by taking a look at them. Well, firstly, when it comes to the Nifty rollovers, they stand at around 56% right now. And of course, this number is likely to rise towards the end of the session, but pretty steady what it seems like rollovers towards the long. The Bank Nifty, of course, expired yesterday in terms of the June futures. We're now looking at the July futures, and that's where we have more traction coming in. The Bank Nifty also making yet another life high yesterday, remember. And moving on in terms of the options market, today, of course, we have the weekly and the monthly options expiry as well. And what we're looking at yesterday was where we're a lot more writing inputs and perhaps on expected lines considering the Nifty moved higher. But when it comes to your overall open interest distribution picture, until about 3 or 4 sessions, there wasn't as much open interest building in the puts, and that has completely changed over the last 2 or 3 sessions. As you can see, we have fairly a decent amount of OI in 23,500, 600, and 700 puts, and that could perhaps be a little bit of a support zone for the Nifty in today's day of trade. On the other hand, we are within kissing distance of 24,000. And the reason why that becomes even more important is that should we see some strength in the Nifty any time today, and should it move above the mark of 24,000 and sustain above that, there's a likelihood that a lot of these calls will be unwound that could perhaps push the Nifty even higher. That is something that all our viewers need to keep in mind, because of the fact that since the starting of this particular series, there always was and has been a substantial amount of writing around the 24,000 call. Now, that's as far as the options picture is concerned. We're looking at a lot of unwinding in stocks, and among them, of course, SBI Life, Oberoi Realty, Crompton, or Aurobindo Pharma come into mind. Besides that, we will have a reaction on Dr. Reddy's on the back of the acquisition news today. Tata Motors and Infosys having, along with, of course, L&T, having their AGM as well. So these are some of the large caps that we are keeping an eye on in today's day of trade. But what do we do with all these factors as we move in? Well, let's get in an expert opinion. We have Rahul Ghosh of Hedge.in who's joining us on the show. Rahul, good morning. Thanks for joining in. Let's start off, as usual, with your view on the benchmarks. I remember the last week you were expecting a little bit of weakness, but has that view changed as we've seen the benchmarks make new life highs, or do you still maintain that we could likely see some weakness going into July?
Good morning, and thank you for having me. Absolutely. So last Thursday, if you remember, we were seeing a tad, or we were expecting a tad bit weakness on the Nifty. And if you notice, Nifty did go below the 23,400 mark. And we were expecting bullishness in Bank Nifty. And that is why, if you notice, we planned a bullish strategy in Bank Nifty at 52, 53, and 54,000 using the calls of Bank Nifty. And Bank Nifty, if you notice, proved to be the stronger index last week. Currently, if you notice the FII positions, the FIIs are in excess of 92% long. Historically, whenever the FIIs have been more than 92% net long, we've seen a small correction in the index. If we extrapolate this number using a custom software that we use, we see the absolute top at Nifty at 24,250. I repeat, using this, if we extrapolate the numbers, we see an absolute top at 24,250. That is the level we are keeping in mind and forming a strategy that if Nifty goes up to 24,250, we would make money. But if Nifty forms a top over there and was to correct back in the month of July, or if it stays sideways in the month of July, with that upper range, we still make money. So if you're okay, we'll go ahead and discuss the strategy.
Please go ahead and explain what option structure you're deploying here.
Sure. So we're doing a similar call butterfly, just that the last leg that we are using this week is the second week of July and not the first week, which we used in Bank Nifty the last week. So what we're going to do is we're going to buy the 24,200 call of July end expiry. We're going to sell 2 lots of the 24,500 call, again of July end expiry. by buying the 24,200 and selling two lots of 24,500, up to 24,500, we get protected. That is, if Nifty moves another 650 points up from here, we're still protected and we still make money. Also, the first two legs gives us a net credit in the trade. The last leg is an offset for the 24,500 call because we have two sold calls with one bought call. We want to make sure we are perfectly protected in an unforeseen circumstance. So the last leg will be a bought leg of 11th July, which is, I think, trading around 34, 35 rupees, primarily being a hedge for the 24,500 second call that has been sold. So net, we have the 24,200 call buy one lot, which is end July expiry. 24,500 selling two lots, which is again end July expiry, and buying one lot of 11 July, again of 24,600, I beg your pardon, which would be the last leg. The net risk in this trade would approximately be 2,000 rupees. This is taking into account the rollover that happens from 11th July to end of July. And the reward can be in excess of 4,500, depending on which part of the month Nifty closes where.
Rahul, just a follow-up question. For those who are relatively newer to the options trading market, why is it that you've chosen the 11th July strike in this case? What are the advantages of using that in the structure that you deployed?
Two reasons. One is that we don't expect a move above 24,250 in the month of July. That's the reason why we are selling, if you notice, 24,500 and buying 24,200. If Nifty goes up and stays anywhere up to 24,500, this strategy will make money. If I actually take the last leg also to be 25th July or end July expiry, then it does not give me a break-even credit or debit. It actually gives me a debit in the strategy, which means if Nifty stays sideways or goes down, I would actually lose in the position. To make sure the premium is lower for the last leg is why we take the 11th July. Also, to make sure that our view stays intact, which is Nifty not crossing 24,250 or stopping rather at 24,250. That is the reason behind the last leg being the second week of July and not the last week of July.
Absolutely. So it is critical as to what kind of net premium you're working with at the moment. And this is, of course, a part of how Rahul has chosen to deploy this particular option structure. Well, Rahul, on that note, taking a moment to thank you for joining us and taking us through your views on the markets and also helping us how to deal with them in the near term based on your views. With that, it's back to you all.